is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I am Alex Tapscott here with Andrew Young. Andrew, last week we had a fun conversation about our top predictions for 2024, and we shared some interesting ideas. I think that's some were sort of in line with what others have been saying, and some were very contrarian. One of the things that you mentioned was that you thought that some of the the more longer standing platforms were going to have a resurgence in this next market, and a lot of that had to do with the fact that underneath the hood, there was a lot of new innovation and technology that was happening. We cited platforms like Cosmos, for example, Avalanche, and others. Another prediction that I made was that stablecoin values were going to continue to surge, even though the market and all crypto assets declined pretty significantly in the last cycle. Stablecoin value outstanding barely dipped at all, and right now sits over $120 billion in value. One of the big drivers, I think, of stablecoin growth is going to be its application in more traditional financial business lines, including things like, say, payments, for example, but also the growth of these assets on different chains. They started as Ethereum and Tron and some of the early blockchains, but have since expanded into other areas, including the Cosmos ecosystem. So I think this is the kind of the perfect guest we have on the show to really kind of dig into this idea of both the surge in stablecoin value, the move to different chains, and also how some of these other platforms like Cosmos are having I wouldn't say a resurgence because they haven't really gone anywhere, but people are starting to see that there's real value to building on these platforms. So we'd like to welcome back to the show Jelena Djuric, who is a repeat guest, fan favorite, the CEO and founder of Noble. Noble, we'll let Jelena tell you a little bit about the show. We actually had Jelena on in, I believe it was August of last year. It was 6 months ago, before the project had launched. And I would say that Noble is one of the real success stories of the early leg of this new market cycle that we're in. And it's been driven in large part by some of these ideas and themes that we've kind of identified, Andrew. And so maybe, I don't think, rather than me taking credit for the idea, I'll let you take credit for it since you're the one who actually helped to make this happen. But we're really excited to have you back on the show. And really curious to, well, first just get an update, like how things gone. I think when we spoke last time, it was pre-launch, and boy, it seems like a lot of water has gone under the bridge since then.
Yeah, thanks again for having me, Alex, and good to see both of you. I mean, it's definitely been an interesting 3.5 months or so, maybe closer to 4 months. So the last time I was on the show was August, like you mentioned. And so that was before we actually launched with USDC on Noble. We had launched the Noble chain itself, but it was really, not much activity there. Other than a kind of fun NFT kind of campaign that we did, but no real value. And then since then, it's been really exciting. So we've actually issued about $97.6 million of USDC, getting close to that 100 million mark. But really, just throughout the whole kind of crypto ecosystem, there's been incredible kind of growth of stablecoin activity, which I'm sure you've covered kind of on the show. I mean, Solana, I think I read something yesterday from Laura Shin, something like a 2,300%, growth of stablecoin volume from like the preceding year, so January 2023. And, other sort of kind of low fee networks, like including Noble, right, that have seen a lot of this growth. One thing that we did, which is exciting, and something that we'll kind of continue to see more of, but we actually built out this cross-chain transfer protocol implementation, CCTP. So this is Circle's native bridge that allows native minting and burning kind of cross-chain from any CCTP supported network. So in this case, Ethereum, Noble, Polygon, Arbitrum, Optimism, Base, and then I think Solana is soon to come. So a really capital efficient, sort of easy way to do cross-chain activity. Again, me as a user has native USDC, let's say on Ethereum. I want to send that over to Noble, and I could do so sort of with Circle as this kind of issue Circle signing the attestations and kind of verifying those transactions like in the middle, to kind of attest to the veracity of those of transactions, and that they pass certain checks. And so Noble is the first non-EVM chain to go live with CCTP, which is very exciting. So a lot of the volume that we're actually seeing is actually through CCTP, which is very cool. So, the infrastructure is just getting more robust, more developed, more kind of professionalized in some sense, I would say,
Yeah.
and more capital efficient, right? So we're not looking at, users losing, hundreds of thousands of dollars of their stable coins, for example, by having to route through, AMMs or DEXs that, are not kind of efficient from a kind of pricing perspective. So yeah, really proud of that. And thanks again, for having me to chat about
Yeah.
some.
Well, let's put a number on it. So pre-launch in August, and so since then, like, what's the best way to sort of measure your success so far?
It's a great question. I mean, for us, what we really see our role as being is kind of being an ambassador, for these various asset issuers in this environment, in this Cosmos ecosystem, which, is a highly decentralized, highly sovereign, highly permissionless kind of ecosystem of chains that includes, dYdX, V4, Osmosis, Kujira, many other DEXs, many other DeFi applications. And so we kind of come in and we say, okay, well, what are all the integration points that we need to sort of have a proliferation of something like native USDC? How do we work with all of these app chains to ensure that, this asset is sort of effectively kind of used, and the user experience is proper, and things like this. And so, I mean, some metrics, I can pull them up right now, but, definitely sort of monthly kind of transfer volume is something that we look at, right? So we have every incentive in the world for USDC, for example, to not stay on Noble, right? To be, used in a DEX or an NFT marketplace, or even actually in stores for payments. We can talk about that in a moment, but yeah, in the last 30 days, we've had $344 million of IBC transfer volume. So that's really the number, the volume at which, USDC sort of changed hands. So the total issuance is about 97 million. And then the transfer volume of that asset is obviously much higher. And that stands at around 344 million in the last 30 days. So, 100, and so I'm just looking at numbers right now, 103,000 transactions, kind of unique transactions. About 7,000 kind of wallets, 8,000 wallets interacting with USDC. And things like this. And then one other thing that we're really proud of, I mentioned kind of integration points, but more and more, I think people are kind of understanding that stablecoins are not just used for DeFi or DEX, or speculation or buying crypto. They're actually used for buying like real world goods. So we have a initiative with a company called Cypher Wallet, a project called Cypher Wallet that has a partnership with MasterCard to actually do in-store purchases with USDC. So you can imagine if you're somebody who comes from like a high inflation kind of country, you probably want to hold US dollars regardless, but what better way to hold USD than a stable coin, a trusted stable coin like USDC. And so we've done about $250,000 of in-store transactions with USDC from Noble in stores all over the world, mostly actually in Asia, which is interesting. And the US and Canada. So, the US and Asia, not really Canada. And so, anyways, yeah, very, very exciting. And it's great to see just the stablecoin market growing as a whole. I mean, I'd be curious to know kind of how you're thinking about stablecoins and that number of 200 billion in this upcoming year, and how we get there, and what that means for crypto, but also just generally making these assets more accessible to kind of everyday folks.
Well, those are a lot of great jumping off points. And thank you for asking, because I have lots of opinions. I will say, though, that the last time we spoke, I think, was over the holidays. And at the time, asset issuance was around $50 million. And since then, the crypto market has gone generally flat or down, but your assets have increased and the whole stablecoin market actually has increased in size. So there's always a bull market in something. It's an expression that we used to say back in my days on the sell side, just to like always seek out like where opportunity was. And it seems as if like there's always a bull market, or there seems to be a bull market right now in terms of stablecoin issuance growth and adoption, right? And it doesn't mean like stablecoins are by definition not investments, really. They just like hold their value versus the dollar. But the area itself is one where there seems to be a lot of innovation and growth. And actually your partner circle seems to be very focused on unlocking the value of stablecoins beyond being used as a trading pair and as a store of value within the crypto ecosystem, and seeking out ways to also have it be applied to other aspects of financial services like, you know, payments and lending and so forth. So really cool to see that you're doing a lot of that too. The transfer volume is kind of interesting, right? Like you got 97 million, but in a month it turned over 4 times. Roughly speaking, and that's 3.5, 4 times. That's kind of remarkable. To me, it suggests that it's not being used as a store of value, because if it were, then it would have less volumes. So it seems to me like it is still being used primarily for a high like velocity of transactions. I'd be very curious to see what that ratio looks like as time moves on, right? Like maybe in a year you're at $1 billion and it's trading, you know, $500 million every month, because people are increasingly in those parts of the world like Asia and elsewhere using it as a medium of exchange, but not like every single day or trading a lot. They're maybe using it to store value as a hedge against a currency that they are worried about losing value, and then maybe using it from time to time to pay for goods or services. So that dynamic between transfer volume and asset AUM or whatever asset issuance, I think is a really interesting one. And I really want to dig into the whole RWA thesis as well, but
sorry, I have one very interesting fact. Just on your point.
Facts.
Yeah. Maybe you can put this article in the show or blog post in the show notes. It's actually by Liam Horn. He did a really nice blog post yesterday on stablecoins. Very core kind of Ethereum kind of developer and so on. So, you know, very much an authority on the subject. But he wrote in his blog post on stablecoins that today they make up 70% of all crypto transaction volumes, despite only composing 10% of the crypto market cap. So to your point on kind of it change, you know, that asset changing hands and, you know, the transfer volume, you know, in this case were, you know, 1 to 4 or so, 1 to 3.5. You know, in this case, it's actually that difference is much greater. You know, if you consider the overall market in terms of market cap to volumes, transaction volumes. So, yeah, I mean, just kind of, you know, just kind of validating your point just now around, you know, it'll just be interesting to see how that kind of evolves and what that delta looks like kind of in the future. So.
Well, yeah. I mean, that's facts. I know Andrew's trying to jump in here. I mean, the facts says the 2 things to me. Number one is that stablecoins are clearly the first killer application of blockchain, other than Bitcoin as a store of value. But also, I think that it shows that even though you have a really high turnover rate, it's lower than the industry, which suggests that either they could suggest several things, including that maybe some of the usage is not just being used for trading, it's being used for other like slower velocity kinds of applications. Andrew, sorry, go ahead.
Oh, no. I just, I wanted to talk a little bit about the dYdX launch. We had the CEO of dYdX Foundation on, Charles, about, I think 3 weeks ago, right, Alex?
Yep.
And I saw last week, actually, the new dYdX chain has actually surpassed sort of their old dYdX V2 in terms of volume and traders and things like that. I'm curious to hear a little bit about like how, I guess, the launch of sort of dYdX chain has helped you guys, and then also if there's kind of any other kind of like new chain launches in the Cosmos ecosystem in 2024 that you're really excited about.
Absolutely. I did see part of that episode with Charles. He's great. So glad you guys had him on. I should probably finish that episode myself. But yeah, I mean dYdX. I mean, as you guys know, by volume, they are the largest. I think they're the largest DEX in all of crypto. I think they surpassed even Uniswap. And so obviously their V4 surpassing V3 is like another milestone, right? So there's
Yeah.
like two milestones. There's like all of crypto, and then there's V3 versus V4, and kind of looking at what that kind of signifies. Yeah, I mean, a couple things. So for Cosmos itself, it's a great validation, of this like app chain thesis. So dYdX, obviously they evolved from, a smart contract on Ethereum to kind of being kind of more of an application on a layer two, on Starkware to, now being their own app chain. And it's a natural evolution if you think about it, because a lot of kind of projects that start off kind of on ETH as a smart contract, and then scale and kind of build their own moat, so to speak, and kind of need new features to kind of defend that moat. In the case of dYdX, they were looking to kind of optimize their decentralized order book, which is much easier to do kind of in Cosmos on Tendermint. That's kind of the evolution there. So as soon as you reach enough scale, it makes a lot of sense to build an app chain in the Cosmos ecosystem. I'm very biased, but that is of course the path that dYdX took. And then for Noble and for kind of the rest of the ecosystem, they definitely did bring a lot of new mindshare to kind of the stack, to the ecosystem, a lot more interest and enthusiasm, and then also just new liquidity, like net new capital, right? This is something that we saw with Terra back in the day, and I think we talked about this on the last podcast, but Terra obviously was a huge kind of source of activity and liquidity and kind of enthusiasm that actually also trickled down to other Cosmos chains, including the Cosmos Hub and including Osmosis and others. And I think we're going to see something very similar with dYdX. In terms of that kind of overall like net new liquidity and kind of enthusiasm and interest. But Andrew, sorry, I think second or part of your question was also kind of new projects.
Yeah, new chains, because I know you mentioned Kujera, which is kind of like an upcoming new one, or I guess it's been around for a bit, but sort of exploded in growth over the last kind of 6 months.
Yeah.
Just definitely curious to hear kind of like what's coming in the Cosmos ecosystem that you're excited about, both for Cosmos, but then also obviously for Noble as well.
Yeah, definitely. I would be remiss not to mention like Celestia, like that's, obviously a long time coming, and it's in fact already launched, but they have a long way to go. I think in terms of kind of their roll-up kind of ecosystem, and we're actually working with Celestia to actually get native USDC into their roll-up ecosystem. So they don't have to, these kind of roll-up developers don't have to bootstrap their own liquidity. They don't have to sort of work, necessarily to create new standards for this. We're kind of working with them to make this something that they can have out of the box, something like native USDC. And then, new projects. There's one actually that we're very, very excited about, and they have not launched yet. So, unlike Celestia,
It's called Noble Coin.
Noble. Yeah. You promised me you wouldn't bring up Noble token. I'm just kidding. We didn't discuss this.
I'm just kidding.
I love it. No, it's good. It's something to think about for sure. I mean, as our kind of community grows. But no, nothing established on that front. Yeah, so on there's one project called Settlus. So Settlus is a Cosmos chain. We can also include some information about them in the show notes, or whatever you'd like. But they are actually it's a new Cosmos chain that hasn't yet launched, and they're developed by a company called Krafton. So Krafton is a South Korean gaming development company. So they're actually the makers of PUBG. Which I think is the second largest, like the most widely played game in the world, second like most played game with in terms of like active users and things like this. So Krafton is a huge company. They have like thousands of employees. It's a publicly traded company in Korea. It's a very impressive operation. And so they've actually chosen the Cosmos ecosystem to build Settleless. And so Settleless is actually a chain that can do creator payouts in stablecoins, and we're going to be doing USDC. So we're working with them to have Noble kind of be the minting kind of redemption kind of chain, on-chain partner to Settleless for native USDC, and then making sure that their kind of workflow of a creator, for example, that needs to be compensated, can do so, kind of in a compliant, kind of straightforward way. And so we're kind of building that workflow on the back end. Noble, Krafton, there'll be other kind of entities in the mix, including Stripe, for example, and then probably centralized exchanges and things like this. But again, Noble is kind of the facilitator of that kind of backend infrastructure to say, hey guys, you have all of these like 10 requirements for this like very specific use case for this Settleless chain. How do we fulfill those requirements? And yeah,
sorry, the Settleless, so Krafton and Settleless. So Krafton is the company, Settleless is the chain. And is
Correct.
you said they're a gaming company, so is the idea that this is a chain that'll be used for like Web3 games, or what they have in mind?
Yeah, I mean, it doesn't even have to be just Web3 games, but the Settleless chain itself will just be facilitating the creator payouts for the various games that Krafton develops, which will likely include obviously Web3 games. But you can imagine, paying creators out in stable coins in non-Web3 games.
Yeah, of course. Yeah.
And that's why you need that off-chain component, with Stripe, et cetera, to kind of facilitate that. But, much, much more doable than using fiat, for example, for this particular use case.
Well, sure, especially if the creators are all around the world and you're looking for a way to pay them in dollars, right? I just feel like that seems like such an obvious thing that like so many digitally native companies have got lots of contributors and they all need to get paid in dollars, and there's no easy way to do that. And so this is like the solution. And the more of them that do stuff on Cosmos, it all kind of accrues to Noble, basically. So like it doesn't seem that hard to wrap your head around, even like coming at it from like a TradFi or even like a lay person's perspective. It's like, people don't probably appreciate how I really believe that like your average Canadian or American does not really comprehend how systemically important and desirable dollars are.
Yes.
They just don't. And it's like every person in the world, if given the option, would save at least some of their money, if not all of their money, in dollars, depending on where they are in the world, and would prefer to get paid that way. Because not only is it a better store of value, it's actually more useful. It's fungible in local economies and also in the digital economy. So it's just very intuitive to me.
Well, quick fact, I'm throwing out these facts like spontaneously, but something like 60% of the demand for the US dollar is outside of America.
Oh, yeah. The craziest factoid like that is that there are more US dollar banknotes in circulation in Argentina than in the United States. That I find shocking.
I did not know that. That's really interesting.
It's a fraction of the population and like a tiny percentage of the GDP. But it's like as a store of value. And so, that's what stable coins are, is a way to just to accelerate and reduce the friction and make it more portable and more useful ways of doing what people are already doing in the order of magnitude of in the order of hundreds of billions of dollars anyway, right?
Yeah.
It's just, Anyway, okay, so that's dollars. But it turns out there are lots of other assets out there other than dollars. Real world assets. I think of US dollars as being a real world asset. I know some crypto people think that, it's a ticking time bomb, but there are lots of other assets out there. And in fact, you just announced yesterday that you've signed an agreement, or you're entering into a partnership with Hashnote, which is an issuer of US T-bill like products on chain. I'd love to understand a little bit about that strategy and how maybe it speaks to your diversification beyond just the USDC partnership into these other assets. So go ahead.
Absolutely. Thank you, Alex. So, we've obviously seen tremendous success with this model, with Noble kind of servicing this very large, very active Cosmos ecosystem, and finding all of those integration points for USDC, whether that's again directly on the DEXs themselves, like osmosis, or kind of on and off ramps, like our Coinbase integration, and so on and so forth. And so we're really looking to expand that model to other assets, of course, keeping in mind the kind of unique elements. So something like a USDC, which is dollars on chain, is very different than something like USYC, which is a lot more regulated and compliant. So USYC is the on-chain asset, and so it's designed to offer tokenized returns backed by short-term US Treasury bonds. So I think they were yielding something like 5.2% last time I checked on chain, which is pretty incredible. And the USYC also guarantees T+1 redemption, so within 24 hours or so. And so the entity that is the issuer of USYC, so analog to Circle, in this case is Hashnote. So Hashnote is a US company. They're backed by Cumberland Labs and DRW Holdings, so two sort of blue chip names, Cumberland in the crypto space, DRW in the TradFi space. And so, yeah, we're coming together to kind of build out the infrastructure for, Hashnote to be able to offer this asset again on chain in a way that is totally kind of compliant and, secure and kind of accessible and things like this. And so, yeah, our announcement yesterday was really about this partnership and kind of demonstrating kind of Noble's value proposition, for Hashnote and vice versa. And really seeing what the use cases for T-bills on chain will become. It's actually very early days. I know that there's a lot of kind of buzz and media around RWAs, but if you actually look at the numbers, it's still early days, right? Like there's, I don't know, 5 to 10 or so kind of issuers in the T-bill space and, the tokenized treasury space. And really the TVL is, first of all, mostly on Ethereum, but second of all, it's kind of between, I want to say 30 million and 150 million or so. We'd have to double check the numbers on DeFi Llama, but it's just to say that difference is actually not that large, and the total kind of market cap is not even that large if you think about it. So, early days. I think we still have yet to see a lot of the use cases for on-chain treasury bills and things like this kind of come to fruition. Again, they are very different than stable coins in a lot of ways from an access transferability perspective. But these are highly liquid assets that also, I think, just generally have a lot of demand around the world. So yeah, we'll see kind of how it shakes out.
I think I do want to talk a little bit also about sort of just the Cosmos ecosystem as a whole, because I had a really interesting sort of conversation with your co-founder a couple months ago, and I actually saw it was really good timing because I saw actually I think like less than 2 weeks ago a proposal go up on Cosmos governance for to sort of have to integrate you guys as like a consumer chain for Cosmos shared security. And so sort of where I'm going with this.
Explaining a little bit what you mean by that, like as a consumer chain for shared security.
Yeah, I mean, I'm not a total expert, but
as well.
my understanding is that it allows sort of chains to leverage the validator set, and therefore like the higher security of the sort of native Atom token. Again, Jelena, correct me if I'm wrong. So it allows you to sort of bootstrap a chain with much better security. It's almost like a version of like a layer 2 in a way.
Yeah.
But yeah, okay, so that's
it. Yeah, it's really simple. It allows Atom stakers to stake new chains. So with their existing stake. So it you inherit the security of the Atom token and things like this. Yeah, so absolutely.
Yeah, and so what I'm getting at with this is like Cosmos has always been this project that everyone sort of says has amazing tech, but no sort of value accrual to the token, and like no sort of clear avenue to value accrual. And the shared security as of now has been there's been a lot of hype, but there's not been a lot of demand for it. But what's interesting is with Noble, given how sort of important it is to the whole ecosystem, it's actually like a perfect end customer for this type of
Yeah.
for Cosmos shared security. And so in a lot of ways, it's really interesting because it could be like Noble could be, especially because also Noble's dealing obviously with like USDC and Circle and all these like highly regulated players that they need maximum security
Yep.
and trust. And so it's interesting because Noble in a lot of ways could be the perfect customer for shared security, which is kind of like, I guess, the bull case for the Cosmos token itself. And so it's interesting to see that you guys are now moving away from like POA to this. Do you want to just talk a little bit about that, and also just I guess also just kind of like why you chose to use Cosmos shared security?
For sure. So, yeah, thank you for the question. So the proposal or the draft proposal that went up on the Cosmos forum is actually, it was community led. So I put out a letter right for the holidays to the community, sort of just giving an update on Noble's kind of interchain security plans. And we did ask for, a few things to be figured out kind of before we're fully ready to transition to interchain security. And actually, a lot of that is the economic model for interchain security and just making sure that it kind of makes sense for validators, delegators, and Noble itself. Andrew, you raise a bunch of really good questions and points actually around the kind of alignment, right? Like symbolically and I think philosophically, which is hey, here's Noble, we're doing great work with total issuance and connecting to all the Cosmos app chains and being this integrator of sorts. And therefore we need high security and high guarantees. Absolutely. However, just, till we kind of fully make that transition, just, two things. So one, the interchain security kind of economic model, making sure that's kind of figured out. So right now, actually, it's not really all that clear what the alignment is between the Atom token and the consumer chains that currently exist, which are just two that are live, which is Neutron and Stride. So that's still kind of being figured out. And then secondly is also governance. So it is actually possible that this year, and I do hope for this, that we'll actually see a V2 of interchain security come out, which is actually a subset of the hub kind of opting in to validate these new consumer chains. And so that's called replicated security. And that is something that the kind of core developers of interchain security are figuring out right now, which is Informal Systems. So yeah, so that's really the two pieces we're just sort of wanting to make sure there's kind of more guidance on before we make the jump. But yeah, it's definitely something we're looking forward to.
Yeah, well, I already know that Noble's unlocked a lot of value for other Cosmos chains.
Well, and that's what we care about. Yeah, and exactly.
Yeah.
And like that's what we've tried to do. Like our V1 go to market was it's very simple, like just total issuance, total transferability, transaction volume, integration points, users, etc. So yeah, thank you. It's definitely good, validating to see that be a reality.
All these dexes are useful only if there's a dollar pair, and so there hasn't been, and now there is a good one, and so the more you grow, the better, that the more useful they become, and vice versa. So it feels like a virtuous circle at this point, which is really nice to see. So T-bills, dollars, what's next? Or do you want to remain focused on this one area? Because I think that there's so much opportunity, but you also don't want to spread yourself too thin. So how do you think about growth?
Yeah, it's a great question. I mean, we definitely do want to diversify. So like our focus definitely is USDC and kind of maintaining that element and continuing to go up, right? Like we want to continue to obviously go up and up and up and to the right. But with that, there are other very, very interesting kind of stable coins and useful assets that are definitely ones we'd want to see come to Noble. So other examples are Actually, we have another partnership. This was announced, months ago. It is with a Japanese entity called Toki Finance. They're working with MUFG, the kind of financial conglomerate in Japan, Mitsubishi Financial Group, to bring yen-backed stablecoins to blockchains, including Noble and Ethereum and others. And so that's really exciting to us. So other fiat stablecoins are definitely something that we look at and consider and care about. Japan is the second largest world economy that I think people often kind of maybe forget after the US. They're a huge financial center, especially for Asia. So yeah, I mean, having that kind of come to Noble, seeing the use cases that'll unlock is very exciting. And then, euro-backed stablecoins, we haven't confirmed anything, but definitely see that kind of becoming more and more of a thing, especially with regulations like MiCA. And yeah, I think other RWAs, we'll continue to see other classes form. I mean, I will say, like, Treasury bills seem to be like the one dominant one right now. But I think that'll kind of evolve. And so, we'll go, I think, where things evolve, and we'll make sure that the infrastructure and the kind of ecosystem around Noble is as robust and as kind of, sturdy to kind of support all of these issuers, kind of in the coming months. Yeah.
I love it. And I think that looking at currencies and government bonds and things like that, those are a really good place to start because they're assets that aren't like tangible, strictly speaking. And I think that part of the struggle with the RWA thing is like, where is the asset warehoused, and what is the title and so forth. So people put like, say, real estate or commodities or art and physical art and other collectibles. I feel like there's this added complexity of like, you have to take delivery, you have to store, you've got to secure and so forth. Whereas when it comes to securities and money in the modern sense, like they're already digital in the sense that they're already entries on a ledger. Now they just happen to be entries in a centralized ledger, and you've got a trusted intermediary that you're placing all of this faith in. Now we're trying to move it to a decentralized ledger. But that transition, I think, is actually pretty seamless for those assets. And the good news is, starting with asset classes that are trillions of dollars in size and incredibly liquid is a pretty good place to start. So I feel like, as a startup, you could USDC and dollars, whether they're, current dollars in terms of like money you spend or liability dollars like T-bills, it's still dollars. Like you could grow within that category to hundreds of billions of dollars, without really like reaching in at any kind of outer limit. And I think that's also especially true if, the Cosmos thesis is correct, and more companies and applications launch who are entering the blockchain world choose to do so by creating their own chain because they view that as a way to guarantee more autonomy and control and what have you, then they're always going to need some way to interact with dollars, like any other company or any other enterprise or organization in the whole world. And so if you believe in the Cosmos thesis and the general Web3 thesis, then Noble appears to me to be one of the big potential beneficiaries. Now, I think there's so much more we could discuss, which is like, do you have any competitors? And like, if this is such a great opportunity, how come everyone else isn't doing it? Maybe we'll leave that to the next episode, Jelena. We'll do
let's see how things shake out, and then
the Noble trilogy. and the Return of the Jedi will come in 6 months' time. We'll do it every 6 months. We'll see how you're doing every 6 months, or as needed if there's some cool thing worth talking about, which there seems to always be. That was a great chat. Thank you so much for joining us. We always appreciate it. And what's the little cartoon person on the wall behind you?
Yeah, I'm surprised we didn't start off with that.
Yes.
This is a bad kid. So Cosmos, our kind of punks in Cosmos are an NFT collection called Bad Kids. And I think it's a really beautiful encapsulation of like the Cosmos ethos and the vibe and the energy. So I got this hand drawn by the artist himself in Paris during ETHCC. And so yeah, that's my bad kid. Physical rendering of the
a lot of Cosmos people have bad kids as their avatars on Twitter. I actually kind of like it. Like,
Do you have a bad kid? You need one.
I don't.
You need one.
Yeah, but I want the artist in Paris. I need the personalized bad kid.
Well, you only get a physical drawing if you have a digital, if you have an NFT. So
Okay, well, I'll get the NFT, but then is the NFT like an image of some random character, or can I get one that's like a close approximation of me? Like, how should I do
let's
it?
go bad kids shopping and we'll find you one. How about that?
I
I'm sure
love shopping. And I love bad kids. Okay, let's do it.
that's awesome.
All right. That's it for this week's episode. Thanks, Jelena, Andrew. See everybody next week. We're going to have a great pipeline of terrific guests. 2024 is going to be a great year. Take care, everyone. Bye.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.